Welcome to the sixth segment in Flipping the Tables special series from the September 26th through the 28th Terra Madre Americas, where Roots of Change hosted the Slow Meat Pavilion. As you will hear in this conversation, one of the big impediments to success for our small and mid-scale ranchers and farmers is traditional agriculture financing. Zach Ducheneaux, an Indigenous American former administrator at the USDA's most important division, the Farm Service Agency, is simply familiar with the challenge. As the founder of the Fifth C, Zach is offering a solution that could greatly accelerate the adoption of regenerative meat production if scaled. Learn more about this critical innovation in his conversation with Mark Squire, operator of Terra Firma Farms near Petaluma and CFO of Good Earth Natural Foods in Mill Valley, California. Enjoy the show.
Well, welcome everybody. So I'm a grocery retailer, and I have borrowed money for groceries, but I have never borrowed any money for agricultural enterprises. So I'm moderating, I'm learning just as you are too here. So don't expect any wisdom coming out of my mouth. But it's a pleasure to invite Zach to the mic. And I thought maybe to start, we could just ask, are there any producers here that have borrowed money or are thinking of borrowing money or not? Or are you guys just interested to see where we're at? Yeah, okay, so solid mix there. Maybe I could start by just asking Zach, what his background is and, how did you get into the world of financing ag?
Yeah, good afternoon, everybody. It's good to see you all. It's really a pleasure to be here. As Mark mentioned, my name is Zach Ducheneaux. What you need to know about me to understand why I'm passionate about this work, first and foremost, I was the fourth child of 7, but I was the firstborn son. So to say that I came into heading to home plate halfway from third is an understatement. I've had it good my whole life, up to and including being my dad's favorite, I would say. But my formative years happened during the 1980s farm financial crisis. And if any of you remember that, we lost hundreds of thousands of farmers from the farm, but a lot of farmers also took their lives during that time. And it was because of really poor federal policy. They told me they're going to record this and bleep out any cuss words, so I might let a few fly. But we didn't need to do it that way. We could have continued to help those farmers stay out there and produce and continue to pay interest and keep them viable by letting them have production income. We chose a different policy and a different pathway that I'm still pretty goddamn mad about. And I've made it my life's work to build a better financial system. Coming out of the 80s, I got into ranching on our place, and I got in at about this point in the cattle cycle. If you are any of you in the cattle industry, you know cattle deal's pretty good right now. And I tried to sell heifer calves for about half the price I bought them for. So it was an uphill battle the whole time. And as a result, I ended up needing off-farm income. So I went to work for the Intertribal Ag Council as a farm advocate to help producers navigate out the back end of that farm financial crisis. That work as a farm advocate led me to a connection with the Intertribal Ag Council that goes on today, but it also led me to my tribal government, where we made meaningful changes to farm policy, to ranch policy around land tenure that allowed producers to be able to make long-term planning decisions because they knew they were going to have access to the land for a little longer. And from there, it led me back to the IAC again for a job standing up a network of technical assistance specialists all across the country to help producers access capital, to help them access conservation programs, to help them access value-added programs, and to help them access the export market. One of the things that was still glaringly absent from the ag industry was a system of finance that supported producers. So we went to work building that.
Yeah, and consumers are so much leading this. I mean, look at this room full of folks that are interested in food, but and being in retail, it's like organic and regenerative is so popular. And one of the really interesting things is that American producers are not filling that gap at all. And so we're importing a lot of organic foods from other countries, which to me is pretty stupid, frankly. So, and I think that it is true that capital is one of those real bottlenecks that prevents that from happening.
Yeah, absolutely. And I would offer that the finance system in this country is not broken. It's functioning exactly as it's designed. It's designed to lead to consolidation. It's designed to lead to the factorization of farms. And it's designed to leave the little, small family producers that want to have a differentiated product out so that it can be gobbled up and consolidated. When I was at the Intertribal Ag Council, we created a finance entity called Akiptan CDFI, a community development financial institution, to kind of lead the way and demonstrate how you could do finance differently. Treat it more like an investment instead of a borrowing and lending paradigm. And I think that's still the piece that's missing with regard to regenerative agriculture or organic agriculture. We've known very well about organic agriculture for decades. We've seen the benefits of regenerative agriculture practices. You can see them demonstrated here in the brochures that folks have. We have to ask ourselves, why isn't that happening at scale? What's missing? So that's what we're going to talk about today. Why? How do we get there?
That really applies to this sector, but really kind of all sectors. It seems like, American business is so much focused on the quarterly stock return or something. So it really inhibits long-term thinking, which is what, to me, investing in soil health and regenerative systems is a longer-term gain and longer-term outcomes. So we absolutely need to explore financial systems that further that.
Yeah, and a lot of the folks that are interested in investing in this space, I can think of a handful of them that have their origins back in the days of big industry. The last time we were getting to this level of consolidation across the oil or the steel industry. So we've got these philanthropic foundations that were built on multi-generational exploitation and extraction, who had this moment of institutional moral clarity and said, let's create an endowment and let's do good things with this endowment. Well, it took several generations to change that. And the irony that we find ourselves in now is that everybody expects producers out there who are maybe in their second, third, fourth, fifth, eighth generation of producing in a certain way to drop everything and jump into a regenerative ag system that they can't get the financing to comfortably do. So often we find ourselves trying to find a way to do regenerative agriculture with capital that isn't treated like a perennial seed. Instead, it's treated like a hybrid annualized seed, and we hope for regenerative perennial results, and that's just a mismatch that we need to continue to work towards solving.
Can you describe the model that you're talking about to fix that? And also just maybe what is the scope of operations that you've been helping?
Sure. I think prior to delving into the model, let's talk about the existential crises that we're facing in agriculture today. On the front edge of another farm financial crisis, we have a 58-year-old producer as the average age, and it's getting older. We have a next generation of producers, potential producers that are disinterested, leaving the farm, the ranch, the production, because they've seen the struggle that the previous generation went through. Or we've got that next generation interested in trying to get in there and take over and be part of feeding and clothing America and the world, but they can't get access to capital that lets them do it. So we've got those three crises that we're facing, and they're supported by a handful of myths that our lending industry is using to avoid having to innovate. We expect producers to innovate every day. We expect them to do more with less. More and more of our producers rely on off-farm income just to provide for the basic necessities of their lives. And we're using the same banking tools that we used since the 1930s. There are no new loan products that exist. How do we solve that? Well, I think we've got to change the nature of the relationship, change the tenure with which we deploy capital. And I'll use an example of what I've done to try to prove this concept and to put my money where my mouth is. Because my role right now is out there trying to raise money from other people to go alongside this. So I worked as a federal employee for the last 4 years. I was your FSA administrator, serving in the Biden-Harris administration. Proud of that work that I've done, and want to pause for a minute and give a shout out to my friends that are still there, and invite you all to go to your local county office and thank your FSA providers, because they are dedicated, tireless public servants that believe in their community, they believe in this country, and they believe in something that's bigger than them, and they're being persecuted every damn day. So thank them for me if you get a chance.
Not to mention being underfunded, yeah?
Oh, yeah, that's, yeah, there's a whole other series of conferences for that one. But the model that I'm trying to advance here is one of a partnership. And it is certainly capitalism, but it's pre-Friedman capitalism. It's where we reinvest in the system grows, and there's more for all. I cashed out my federal retirement, took the penalty so that I could get out there and try to prove this point. So I had $30,000 and I invested it in a young lady that is doing regenerative grass-fed beef on our ranch. So I gave her that $30,000. She bought 10 head of heifer calves. She's got enough capital to operate those heifer calves until they have their first calf. And she's got a $5,000 contingency fund because things happen. And she just happens to be a firefighter for one of the federal agencies and doesn't know whether or not she's going to have a job. In exchange for the use of my $30,000, in the fall of 2026, she's obliged to pay me $3,000, a 10% return on my money. I don't want her to pay me back because that's my retirement. So I'm going to have my money hopefully perpetually invested in her, where we're going to share in the production that she can generate, and she's going to be able to grow her operation. So that $30,000 under this system will cost her $3,000 a year for as long as she keeps the money. If she had been able to get a loan in the current lending climate, the loan would have had to been paid back in 5 years or less, which would have meant at least $6,000 a year would have to come out of the exact same production. That's just not going to work. So I hope to share in that growth with her, and when she does pay me $3,000 next fall, I've got a nephew, I've got cousins, I've got other young producers who I can help get started in this, a cow at a time if we have to. The question that she asked me as we were signing the loan documents was, let's say I have a good year next year and I want to pay you back. And I said, that's a great question, and I love how you're already in an abundance mindset. That's what many of our producers lack. That's what's keeping them from jumping into regenerative agriculture. So she said, I have a good year, I want to pay you back. I said, let's talk about that, because this is another key difference between this system and a lender. A lender is going to gladly take the money back and then see what they can loan it to you for. And I pointed out to her, hypothetically, you've got $5,000 left next year, and you want to pay back what I've invested in you. That is only going to save you $500 over the next year. Your payment in 2027 will now be $2,500. Surely you can find something to do with $5,000 that makes you at least $500 so that we can continue to grow this relationship. She can buy 2 heifer calves and grow her operation. She could keep some of them into the meat. There's so much opportunity in leaving that production income out there. So the folks that I'm working with at TIFs, Transformational Investments in Food Systems, we're working on the retained production income model of finance that will help producers at all stages keep some of their production income in their control, because we're improving the terms of finance that they have so that they can start to operate from that abundance mindset that she was able to start in. And it's not a radically new approach. It's what every endowment enjoys. But what we have to do is chip away at some of the myths that exist that support the current system. The first myth is that paying interest is bad. Paying interest is perfectly fine as long as it's affordable interest and you get to use the capital for long enough to make a difference. If she had gotten a loan at a bank, she'd have paid 8, 9, 10% interest, and she'd have had to give back a fifth of the money as well. In our system, they keep the money. The production income grows, it stays in their control. The next myth is that ag is not profitable. In the entirety of the American agriculture system, last year there was $560 billion worth of debt. That created $500 billion worth of ag income. By any measure, that's profitable. And if that wasn't profitable, there wouldn't be any banks doing it. What we have to do is build a system of finance that allows that production income to stay in the control of that producer, to be deposited in a local bank, so the local bank has to lend it out in that local community, and we can start to cycle that capital through that community and back through rural America. That'll allow producers to have some opportunity to unite around causes like regenerative ag.
It sounds like putting your money where your mouth is, right? But it also sounds like, what you're really talking about is community lending to your neighbors.
Yeah.
And to me, that's a really important, empowering thing. It's we have this whole banking industry that's kind of like sapping money out of our community all the time, when it could be that we're lending to each other. And what it also brings up a little bit is that when you talk about ag making money, to me, I'm always aware that Americans typically aren't really aware of what it costs to make really good, nutritious food like is being sold here. And so I think coming along with that maybe means that consumers need to get a little bit realer about the cost of production and being willing to spend for really top quality food. And I'm a believer that I really do think it comes back. That's also another long-term investment in your own health. And, if you do that, I'm convinced I'm not going to have the doctor bills that, some other people that are eating at McDonald's every night or whatever are going to have.
I think that's absolutely true. And I think another of the myths that we need to chip away at if we're going to solve for this problem, which is an existential crisis, is we have to start to help producers. We need to understand where the producers are coming from. We need to empathize. There isn't a producer in the country that wants their soil to be less productive than it was last year. There isn't a producer in the country that doesn't want to provide something healthy and nutritious to the end user. And there isn't a producer in the country that wouldn't jump into something that could do both of those if the system of finance allowed for it. But they're trapped in the system of finance that's creating exactly what it's designed to create. It's not that producers would do better if they knew better, because there is a growing body of evidence around the practices of regenerative ag and soil health that help producers understand and see what can be. But there isn't the capital support for them to do that and comfortably take that step to starting to convert, because right now it's all dependent on philanthropy. It's dependent on the federal government coming in with the Climate Smart Commodities program, or it's dependent on an incremental approach to this, because so much of their production income is extracted out of their operation every single year. I've got a lot of producers that I work with back up where I'm from on the Cheyenne River Sioux Indian Reservation in South Dakota. With record high cattle prices, this fall they're going to go in, take that check, settle up with their bank, and their entire next year's plan is going to be based on how much they can borrow. Think about that. And then think about the alternative. Think about a system of finance where they become a depositor in that bank and they know they've got enough production income to operate for the next year. They can start to make some different choices. You know, how many folks in the room are comfortable raising their hand to say they've got a salary that they work for? How many of you would change your carbon footprint if your employer come up and said, hey, I'm going to give you all of the money you've got coming for the next year right now up front, and I'm going to repeat that from now on? Would you think about maybe getting that hybrid car? Would you put solar panels on your ceiling? Would you do those things? Would you buy more nutritious food for your family? Until we acknowledge that the producers that are out there doing the bulk of the ag and food production would rather be doing it better, and if the system supported that, they'd move that way, we're going to continue to struggle to see this movement take off, this regenerative ag movement take off. So I'm really a proponent of the producers and helping them access their production income, use their production income, and get into an abundance mindset so that they can make their own plan.
Yeah, as you're speaking, I'm thinking of, actually it was, I think, J.I. Rodale back in the 40s that came out. One of the early books I read was a book called Pay Dirt. And it was kind of all about that, looking at our soil as an investment. You know, he was talking about building soil being like putting money in a bank, and then crops could then slowly be taking it off at that point. So it really kind of is all about investment, except that somehow we haven't figured that out in our financial system at this point, how powerful that could be.
Yeah, our financial system has it very well dialed in. I don't know of very many bankers that have to have a second job just to continue banking. But 89% of all producers have more than 50% of their income coming off the farm. The system is designed and working very well for the finance industry. We have to change it so that it's working better for the producers.
So do you have some other positive examples of things that have really worked?
Sure, and it helps support this, because when we get a chance to talk through this concept with investors, there are two questions that come up every time. The first one is the investor says, this sounds good, what's my exit strategy? And they haven't even dipped their toe in the water, they're looking for the towel room. So that frustrates me and sometimes makes me cuss under my breath, but I got to come up with better answers. So I share with them, that depends on the amount of time you're willing to deploy this money and the concessionary gains you're willing to take to have your moral and values impact this transaction. But the other question that comes up is, where is the data to support what you're saying? It is factually impossible to generate data for something that's never been done before. But we're being asked to do that before they would invest. But there's an analog we can use. And it's my good fortune that when I was serving as your FSA administrator for the last few years, I dug in a lot on that data. And in order to understand, I need to explain what the FSA's loan portfolio is. Prior to the last few years, the last two efforts that Secretary Vilsack has made to broaden the reach of FSA loan programs, they've been the lender of last resort. What that effectively means is that folks that are borrowing directly from the Farm Service Agency cannot demonstrate economic strength to get a loan from a conventional lender, even with a 95% federal guarantee. So they are the lowest rung in the economic ladder in ag production. Despite making loans exclusively to that population, the FSA's loan portfolio has less than a 1% loss by loan value. So it performs tremendously well. But it's because of the flexible terms. that are offered, and the fact that when things go bad, FSA can defer payments, principal and interest if they need to. They can re-amortize, they can reschedule if interest rates have changed, if production systems have changed, they can loan more money. Those tools are available to our friends in the guaranteed loan sector as well. But they're not the first option. The first option is liquidate and make good on the guarantee in a lot of cases. Bringing those examples to bear and bringing that data to the table that helps us demonstrate we can create radically better outcomes. I'll do just a little bit of math here, and then I'd love to ask if there's any questions, see if there's any thoughts that you all have or questions you might have. But I've got a producer that I worked with, had $300,000 in total capital needs for his operation. $160,000 of that was poorly structured term debt. So $80,000 plus interest due this year, $80,000 plus interest due next year. That producer was a cow-calf operator, and they knew that it took them $100,000 in capital to build a calf crop. So from this year's income, they need to come up with $180,000 already. Because of the poor structure of that debt, they had carryover debt from the previous year in the amount of $40,000. So now they're $220,000 in cost of capital this year from the exact same production that they had the previous year. In this system that we're working to create, we would come in and say, here's $300,000 that you need. Take your $220,000 in production income and deposit that in a bank. And probably not the one you've been dealing with, but deposit it in a bank. Now you can operate for the next year based on the production income that you generated last year. And we'll see you next fall. You bring us a 10% return on our money. This producer, in fact, has a 95% guaranteed loan. So it's not only been underwritten by a bank and meets their overly stringent underwriting criteria, it's also been reviewed and approved by the Farm Service Agency. So it's been underwritten twice. This is a rock solid investment. And we are so drastically improving their ability to comfortably make the payment by taking it from $220,000 down to $30,000. We've changed their life forever. We've created the opportunity for them to see themselves as part of a bigger solution, created the opportunity for them to start to do some of the regenerative ag practices from their own production income instead of waiting 4 years for an EQIP contract or hoping that they get picked by the Kellogg Foundation to participate in the Soil Health Initiative. We can change that dynamic, and we can do so in a way that is profitable for everybody. Profit for everybody throughout the system is capitalism. When those in power generate irrational benefits, now we're into greed. This is a capitalist system that we can build that provides profitability first for the producer, then for the company like I'm going to create, and then for an investor, and we can share in the growth together.
So you're actively looking for people on both sides of that equation, both investors and producers that are looking for money?
Yeah, that's a really good question. So we're looking to put together that first batch of producers who are unsatisfied with their current financial situation, cautioning them that we're trying to raise funds to do this, and that is against significant headwind, but we think we're going to get there. But if we have a batch of those ready to go, and we get with a family office that says, we believe in this, how many can you put together? We need to be able to do 10 or $20 million in one transaction. So we're going to put that bundle together and have it ready. We're looking for investors that believe in a different system. Oftentimes, folks that have their money in an endowment, in their fixed income bucket in their portfolio, have U.S. treasuries. And we can all take a look around us and see what the U.S. Treasury buying is doing right now. That's how they finance what's going on in the federal government. We're looking to provide an alternative to those philanthropies, to those family offices, where they can invest their capital in their mission and build a system where they can do that without having to offer it to an investment manager. We want to help them grow that ecosystem, move their money to where their morals and their values are.
Yeah, it's funny how we kind of go into scarcity a lot. And, I recently learned a little bit about college endowments, and those guys are sitting on like literally billions of dollars. And meanwhile, farmers aren't getting the capital they need. And it's sort of like this huge societal disconnect we have going on where we just don't think about that. And I think any healing of the earth is going to require coming together there.
I applaud Harvard for standing up to the administration and saying, no, we're not going to cow to this. But they're in a pretty good position to have an abundance mindset with a several billion-dollar endowment. There are a lot of producers who have went out and done the regenerative ag practices under the agreement that the federal government would pay a cost share, who are still waiting for the federal government to pay their cost share. And they can't fight. That could be the end of their operation. We need to help them be in a place of abundance so that they can start to do those things on their time frame, and then maybe join us in the fight against the things that are going on in this country that none of us can feel good about. So yeah, we have to put our money where our values are and understand that a capitalist system, we can all benefit from that.
So I don't know if maybe we can open it up to questions if anybody's got questions for Zach.
So I was essentially just asking if any countries are working on the model that you mentioned, and I'd like what the United States can take inspiration from, like globally.
I am not the one to answer that question. I don't know if there are. I know that if it was happening in America, I've already got the ranch picked out that I'd be doing ranching on instead of running around the country trying to build it. So it does not exist here. There are some analogs, there are some things that are getting close. There are a lot of folks that I'm really proud to work with and work alongside at TIFs, at Mad Ag, at Steward, at Dirt Capital, at Pot Liquor Fund, who are trying to build the system better as well. One of the things that sets what I'm trying to do apart is that I don't need you to commit to regenerative agriculture. I'm going to help you get into a regenerative mindset. And when that system exists, you won't see me at these things anymore because I'm going to go back to ranching and riding horses. Thanks for the question, though.
I think I have heard of similar things in Germany, but I don't think I haven't really heard of ones in the ag sector. It's been mostly about environmental work that's been financed that way. But any other questions?
So there are many opportunities that exist up to and including walking down that aisle and buying from those folks. That's investing in their regenerative efforts. How you can do this at scale is take a look at banks and other entities that are maybe working on this. I know I met a gentleman named Charlie Cummings who started a bank where people can deposit and know what their deposits are doing. And it's a virtual bank. You could put your money there and know that it's going to go to work. As we build this out, we hope to have an on-ramp for folks like you. I'm cautioned every day that if I can't come across as an investment advisor, so take that all with that caveat, but vote with your pocketbook if you can afford to, support local food, and check out Walden Mutual Bank. He's the one that I know that is taking deposits from regular people.
Yeah, I think it follows up exactly on the last question, but the option for using self-directed IRA funds for real estate investments would enable someone like the previous questioner to either do it themselves or with someone else, as long as they had a farmer partner who they could work with. And those models can result in a path towards long-term ownership, which is even more hopeful.
Yeah, absolutely. Self-directed IRAs, for those that are out there that couldn't hear what he said, that's an option. So part of what we're doing right now is my company, Fifth C, is in the development phase. And one of the questions that's asked, why Fifth C? I am sick and damn tired of hearing about the 4 C's of credit: capital, collateral, capacity, and character. Because if character counted, we'd be able to do better by people. So the 5th C in my framework is courage. Producers bring it every day. The entity we're building is going to bring courage to the conversation. We've got some tremendous measure of support. The 11th Hour Foundation has contributed some to the development of this, as has my friend Kat Taylor and the work they're doing. We've got one other that's talking about trying to invest. We're raising a development budget of about $600,000 that will help build out the entire system so that we can see if we can afford to have those on-ramps for individuals, and where does that intersect with the broader capital markets that we're really trying to tap into so that we can realize that economy of scale on the investment side. Because every individual that we would bring in, we would have to make sure we're doing the same level of accounting as we would for someone that's got 10-figure investments. But I really appreciate where your heart's at, ma'am.
And if I may add, a lot of us are investing and we don't even really know it hardly too. If we have 401ks or we have insurance and the insurance companies are investing effectively our money on our behalf. And so I believe that, if people really own that and we all make a lot of noise about it, don't put your money in companies that are building bombs. Make sure that they're investing your money in, things like ag that, or regenerative ag that makes so much difference. And it's about voting with your dollars.
Yeah, well, voting with your pocketbook works. Otherwise, Jimmy Kimmel wouldn't be back on the air.
I'm really interested in your thoughts on the uptake. So we've had some interesting questions here of people interested in this. When you go out and talk to ranchers and farmers who are generally very cynical about a lot of things in the world right now because of the pressures they're feeling, the challenges, the existential challenge, do they immediately get what you're saying, and are they going, yeah, I want to do that?
It's a really good question. By show of hands, how many people are familiar with the Stockholm Syndrome? Many of our producers are victim to the Stockholm Syndrome, and they've been convinced that I'm the problem. And if I just work harder, if I just do more, if I just get 1 more bushel out of this acre, if I just get 10 more cents on this unit, I won't be a problem anymore and the system will work for me, and that's not the case. I had a gentleman I was on a call with the other day who has the good fortune of having access to capital, Silicon Valley type capital, and had the audacity to talk about the low IQ producers around him. He said, no offense, the low IQ producers. And I said, I'm really effing offended, because you're talking from a position of abundance, and you'd be surprised at how much your perception of your neighbor's IQ would come up if he had $1 million to put towards his goddamn fencing system to start with. So I really believe in the producers. I really believe in rural America and all Americans. And I think we would do better if we had the resources to do it. We just got to build a system that helps regular people reap the same benefits as the corporate, non-capitalist corporations that we're dealing with, the greed-based ones. I really appreciate your time. Michael, thanks for having me out. Mark, this has been a lot of fun. I'll be around for a little bit if anybody wants to visit. And my email is zach.ducheneaux@gmail.com. My phone number is 605-222-3852. And I welcome any and all of you to call me and ask questions. If asking questions in the middle of this kind of deal ain't your thing, and I'll get around to answering all of them. The company is Fifth C, and the website's Fifth C Finance, and we'll get that up and running here by the end of the year. Thank you.
Thank you both very much.
Yeah, thank you so much.
We hope you enjoyed the show. Please share it with your friends and listen to our next monthly episode of Flipping the Table, hosted by Roots of Change, a program of the Public Health Institute, a nonprofit organization dedicated to building a healthier world.